Viraj, I wanted to kick it off on trade because that's what's really driving the equity markets today. But I can't ignore the weakness in sterling. It's historic, really. I don't think it's closed below $1.20 since well before Brexit. Is it possible that we see a new 1985 low going into October 31st?
So I think it's possible. It's one of the scenarios on the table, and it certainly feels like it's dark times for sterling and the pound right now, especially when investors can't see the light at the end of the tunnel, the Brexit tunnel. But I can't help imagine but the next few days, in particular today's sort of big day in Parliament, could shed some light and clarity on what that tunnel or short-term roadmap looks like. And for me, I look at sort of the way the market's positioned and sort of see that short leverage fund positioning in sterling pretty extreme as a big red flag for sort of chasing sterling much lower here in the absence of any real clarity on the end game for Brexit. So look, it's short-term uncertainty right now, but I think there needs to be some sequencing when we look at UK political risks and what's driving the pound. And right now, the first order risk factor is no deal Brexit come 31st of October. And if Parliament effectively takes this off the table today, then I can't help imagine but some of those shorts get squeezed out of the market and cable actually moves higher from here.
Well, absolutely. I mean, that would be that'll be incredibly interesting to watch tonight. If we do see Britain, though, getting ever closer to a no-deal Brexit, Viraj, do you think the pound is more vulnerable against the dollar in dollar terms, or could you see more weakness in euro terms, more weakness in yen terms? What do you think is the most interesting cross?
So I think the dollar, yen, and Swiss franc, they seem to be the safe haven sort of trades here. I think, we can't ignore the fact that euro dollar is below 110 as well when we talk about cable below 120. So, there is a weak European currency complex here, and yes, euro sterling could move higher to 95, but the reality is that cable is the one that targets 110, 115 on a no-deal Brexit.
When you look at the euro pound, it's interesting that we're not nearly as low as we are in pound dollar terms or dollar pound terms. Why do you think that is? Are investors almost as concerned about the euro area in a hard Brexit event as they are about the UK economy, or is it more to do with the expectations out of the ECB?
Yeah, I think there's two factors of sort of when you look at sort of the risks around sort of euro sterling move to parity. One, obviously there's some spill back into sort of the Eurozone economy from a no-deal Brexit. Investors can't ignore that. And second, I think both the ECB and Bank of England will do their very best to avoid any material upturn in sort of euro sterling, not least given the implications that has for both countries in terms of inflation. So I think policy will act as a buffer for stopping euro sterling from moving materially higher, and that's why kind of the sterling against the haven seems the obvious way to sort of play a no-deal Brexit.